Hello and welcome to our special broadcast. I'm Archana Solanki. Here are the headlines we are tracking this evening. Consolidation continues on the WallStreet. Sensex and Nifty end with minor cuts, but mid-caps and small caps see a sharp rally.
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
Government defends the move to remove indexation benefits for real estate while lowering capital gains tax, but sections of the industry say annual returns on real estate is less than 8% and remain unconvinced if the effective tax rate will be lower due to the new rules. The RBI is in advanced stage of conducting fit and proper due diligence on the suitors for IDBI Bank, says DIPAM Secretary Tuhin Kanta Pandey. He expects the privatization to go through this year. That's an exclusive. Supreme Court stays the Madras High Court order on the proposed merger between Lakshmi Vilas Bank with DBS India, issues a notice to the RBI after investors protested the LVB Tier 2 bonds write-off for 320 crore rupees. Opposition MPs stage a walkout in Parliament claiming the union budget ignored all states except Bihar and Andhra Pradesh. Chief ministers of several opposition-ruled states plan to boycott the upcoming Niti Aayog meeting in Delhi. Finance Minister Nirmala Sitharaman calls the allegations outrageous. Google's parent Alphabet reports quarterly revenue of nearly $85 billion. Advertising revenue slows as company ramps up investments into artificial intelligence. Tesla shares stumble after automotive revenue declines for the second straight quarter. Profits margins also miss estimates. Making her debut on the campaign trail, Kamala Harris slams Donald Trump over his rhetoric on fear and hate. Trump will return fire at a rally later tonight. The Trump campaign files a complaint against Harris for taking over Biden's campaign funds. Israel's Prime Minister Benjamin Netanyahu all set to address the U.S. Congress as hundreds protest on the streets of Washington. Over 120 people killed in Gaza's Khan Yunis after Israeli attacks in the last 24 hours. Overall death toll has crossed 39,000. All right, let's start with the day's market action. Consolidation on the WallStreet today after the budget. Sensex and Nifty ended with minor cuts after a range-bound session, but mid-caps and small-caps saw a strong rally. The mid-cap index gained over 1% and the small-cap index gained nearly 2%. Amid rising concerns over rising F&O volumes, the finance minister hiked the security transaction tax in the budget yesterday. But some market experts say the tax increase may not be enough to deter small traders from dabbling in the F&O space.
The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. But the actual numbers is not so meaningful that people will get deterred by STT or by a larger capital gains tax, because if they were making profits, then they would be the worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money.
31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
The finance minister also said that buyback of shares will be taxed in the hands of shareholders, similar to how dividends are treated currently. Now, some market participants say companies will shy away from share buybacks once the tax comes into effect in October.
Nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds and insurance companies or pension funds and so on, who are not who don't pay tax, right?
Former RBI Governor Raghuram Rajan has also reacted to the budget. Speaking to CNBC, Rajan said the budget highlighted the right issues, but not enough resources have been allocated to solve them.
They press all the right buttons, they talk the right talk, But when you look at the aggregate sort of allocations to education and skilling, broadly speaking, they haven't budged. You look at the aggregate allocations to agriculture, which is a big issue given what you said earlier about climate change. They haven't budged. So it's a budget which highlights the main issues, but doesn't really devote resources to them. There is nothing in the budget which suggests these are all experiments. We're doing the same old thing we did in the past, which is allocate a bunch of money to a particular program, see if it flies, and then take stock maybe 5-10 years down the line. We don't have the time for that in India. We absolutely must take a handle of these problems. The one question, of course, is have they promised enough in spending? Is it an ambitious enough budget? Because the key issue that was thrown up in the election is the lack of jobs in India. And certainly there are a whole bunch of initiatives in this budget on job creation, on apprenticeship, on skilling, a whole gamut of initiatives. But the key question is, A, are they funded enough to work? Some of the sums of money devoted to some of these programs are very, very limited. Will they incentivize businesses to hire? So that's question number one. And two, are they of the magnitude that India requires, given the enormous concerns about joblessness?
The Reserve Bank is in advanced stage of conducting fit and proper due diligence on suitors for IDBI Bank. That's the word from DIPAM Secretary Tuhin Kanta Pandey. Speaking to Shireen Bhan, Pandey said he expects the privatization to go through this year.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
The Supreme Court has stayed Madras High Court's order that cleared the merger of Lakshmi Vilas Bank with DBS India. The Apex Court has asked the RBI to respond to a petition filed by investors opposing the write-off of Tier 2 bonds issued by LVB. Ashmit Kumar is here with the details.
Well, let's begin with some context here. It was in the month of April that the Madras High Court had cleared the amalgamation between Lakshmi Vilas Bank as well as DBS, but it was a conditional nod. The Madras High Court had asked the RBI to reconsider the valuation of the combined entity and subsequently had also asked for reconsideration of the write-off for Tier 2 bonds. Now, that is what is at the heart of this battle. As a part of this amalgamation, the RBI had directed for a total write-off of the Tier 2 bonds. Those bonds added up to 320 crore rupees. The investors to those bonds are the ones who are raising concerns as to how their exposure to the extent of 320 crore rupees is being completely written off by the banking regulator. They raised this concern before the Madras High Court. They only met with partial success. The Madras High Court directing the RBI to reconsider whether or not a write-off is required. However, subsequently, we find that the RBI moved the Apex Court. This was moved before the summer break. Today was the first hearing. And importantly, the Apex Court has stayed the operation of that Madras High Court order, has stayed that amalgamation clearance that was given by the Madras High Court. Importantly, no opinion being expressed one way or the other, but the Supreme Court holding that at this stage, it is fit to grant a stay so that this process does not move forward, this amalgamation does not move forward, and importantly, does not reduce the claim of the investors to the extent of 320 crore rupees, the subscribers to those Tier 2 bonds. So importantly, a stay being granted on the Madras High Court conditional nod for the amalgamation between LVB and DBS.
Opposition MPs staged a walkout from the Rajya Sabha, claiming the union budget ignored all states except Bihar and Andhra Pradesh. The MPs began their protests outside the Makar Dwar of the Parliament building. Prominent leaders including Rahul Gandhi, Sonia Gandhi and Samajwadi Chief Akhilesh Yadav took part in the demonstration. While presenting the budget in Rajya Sabha, Finance Minister Nirmala Sitharaman called the opposition's claim outrageous and misleading. Congress President Mallikarjun Kharge led the opposition bloc out of the House during the Finance Minister's reply.
मैं कभी नहीं देखा और ये सिर्फ किसी को खुश करने के लिए, कुर्सी बचाने के लिए वो ये सब हुआ है। इसका हम खंडन करते हैं और इस ढंग से बजट पेश अगर होगा, अगर बैलेंस नहीं होगा, डेवलपमेंट कैसा होगा? आज आपके साथ है, कल लोग वो दूसरों के साथ हो गए। ये तो लोग अलग-अलग समय में अलग-अलग से करते हैं, इसीलिए मैं इसका खंडन करता हूँ।
This is a deliberate attempt, and I'm saying this with responsibility. This is a deliberate attempt of the opposition parties led by the Congress party to give an impression to the people, oh, nothing has been given to our states, it's only been given to 2 states. I would challenge the Congress party for all the budget speeches that they've delivered, that in each of the budget speeches, have they named every state of this country? This is an outrageous allegation.
All right, it's time for a short break, but coming up, government defends the move to remove indexation benefits for real estate while lowering capital gains tax, but sections of the industry remains unconvinced. We'll be back. Welcome back. The government, in its budget announcement, has scrapped the indexation benefits which were previously available for property sales. The government has also proposed to reduce the long-term capital gains tax on such sales to 12.5% from the previous 20%. The revocation of the indexation benefit has raised concerns among homeowners who fear that the long-term capital gain tax incidence may go up if they were to sell their property. The government has, however, defended the move, saying that effective tax rate would be low.
What we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets, for tax purposes, see, individual assets may go at different rates, but we use a steady index for tax calculations which grows at 4.6%. Now let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases, the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And one more thing I want to add. We will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away.
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
Looking at the arguments that the secretary is putting up, and it is all completely revolving around expected gain per annum of about 11% after inflation adjustment, which is actually not possible. Annual growth of property prices are still in the range of 7 to 8%.
My colleague Sonal Bhutra is standing by with more on the impact of indexation removal. Over to you, Sonal.
Thank you so much for that. Well, yes, this budget came with a lot of changes in capital gains in different asset classes. A notable one was changes in property taxes. The government has lowered the capital gains tax on long-term capital gains from 20% to 12.5%. That sounds like a great news, right? But there's a twist here. While the tax rate has been cut, the indexation benefit has been taken away by the government. What is indexation? Indexation adjusts the purchase price of an asset to adjust for inflation, thereby reducing the gains and ultimately the tax liability. Additionally, the finance minister clarified that property value indexed up to 2001 are grandfathered for capital gains. This means that indexation benefits won't be scrapped for old properties which are held before 2001. And that means if you bought property before 2001, 2001 will be the base for cost of acquisition, and if after 2001, then the actual cost of acquisition will be considered. The short-term capital gains will continue to be taxed at the slab rate. Now, these changes will come in effect from 23rd July 2024. This boils down to the question, is this good for a home buyer and a seller? Would this deter home buyers for buying a home for investment purposes? While the government has indicated the effective tax rate will be beneficial for the home buyers, analysis suggests otherwise. This move will not impact those buyers who sell a house and reinvest in a new house, as they can offset past capital gains on sale of old house and reinvest those in a new property. This has to be done within 2 years of sale as per Section 54 of the Income Tax Act. But what about those who are investing in assets other than property or not investing this money at all? This is here where it gets tricky. An analysis by CLSA indicates it will impact relatively shorter term investments where market price growth is less than 10%. However, the impact of this new regime would be neutral or marginally beneficial for investments with longer holding period, that is more than 10 years, but where property price appreciation is more than 10% per annum. They add markets like Bangalore, Hyderabad and Pune, which are end-user driven markets, will be the least impacted, whereas markets like NCR and Mumbai, which have higher investor activity, are likely to be adversely impacted. Home buyers, who are largely investors who were previously utilizing property sales to offset capital gains tax burdens, may reconsider their purchasing decisions due to removal of indexation benefits, which could temporarily dampen sales velocity. Ambit also says the lower LTCG rate may incentivize short tenure property investments, as potential returns could outweigh loss of indexation benefits. But the average rise in home prices in top Indian cities is about 20%, but that is just in the last 2 years, according to the Housing Price Tracker report released by the real estate lobby CREDAI and data analytics firm Liasis for Us. This is coming after the big turn in real estate cycle that started post-COVID. Before that, the industry has been facing a lull in terms of demand and pricing, and prices only risen anywhere between 7 to 9%. The benefit from new regime will come in only if it is more than 10% price gain for any buyer or seller, which we have not seen in a long time. The indication is now the home prices would remain subdued, anywhere between 5 to 7%.
All right, thank you, Sonal, for that comprehensive explainer on what this means and the impact on the home buyers and sellers. With that, it's a wrap on our special broadcast. More news and updates continues. Stay tuned to CNBC TV.